Hi. As John said, I'm Josh Silverman, managing partner of Jericho Advisors here in Charleston. I want to thank the entire Adventure team for having me out today. What I'm here to do is present an amazing opportunity to promote a triple bottom line approach to investing, one that's good for the investors, one that's good for businesses, and one that's good for the community. First off, a bit about what we do. Jericho Advisors delivers cutting-edge wealth management and business solutions to a select group of diverse clientele, from emerging entrepreneurs to experienced business owners, executives of nonprofit organizations. In addition, we work with clients and companies to arrange early-stage venture capital and alternative lending for local businesses, and we focus exclusively on projects in coastal South Carolina to support the regional economy and our rich heritage of locally owned independent companies. We also host some pretty killer art exhibitions, charity events, and social gatherings in our St. Philip Street address here in the vibrant Elliottboro neighborhood of downtown Charleston. It's what we call creative advice for the creative class. And so what I'm going to lay out for you today is, for the next 6 minutes or so, is our approach that I pioneered called 100-mile investing. It's an exciting new way to redirect your investment dollars to companies you know in your own backyard and to profit from the process. I'm sure by now you're all familiar with this slide here. It's the local multiplier. The goal of the local multiplier is to highlight the economic theory that by shifting some of your discretionary spending to local businesses, you're going to ultimately profit those businesses and keep more money in the community. Based on their research, for every $100 spent in a local business, almost 75% of that money stays in the local economy, whereas for the big box store, you're going to narrow that down to almost 43%. So a lot of that money leaves Charleston. And groups like Low Country Local First are championing that mission here. I'm a big supporter of their mission, and they're all over that. But and focusing our attention on consumer spending in such a straightforward way is really an effective method for capitalizing this type of community. The Bureau of Labor Statistics has estimated 68.5% of the US GDP was spent on personal consumption alone. It's about $9.5 trillion. So a simple 10% shift, of course, $950 billion shifting into the local economy by just taking that little 10% margin. This will accomplish a major economic feat, right? Makes sense. But since I'm a supporter of this trend here, it's been over 4 years since I've willingly gone to a Starbucks to buy their coffee. I'm an investment professional, though. I want to make money, right? We're capitalists, that's why we're here. But I was wondering why we weren't seeing this shift in the capital markets, too. Personal and professional investing is a market that's just as big as personal spending. It's $10.3 trillion of M3 investments. It's all the brokerage accounts, CDs, money markets, bank things of that nature. It's a big number too, and to take a 10% shift of these accounts makes just as much economic sense as it does taking personal spending off the table. And some of us are far more concerned about those portfolio assets than maybe where we're going for our coffee, but still, big number. Basically, though, the problem until now has been a way for investors to conceptualize this process. It's easy to understand that if you take $10 from your $100 pizza budget and go buy a pizza at D'Alessandro's rather than Domino's, that you'll impact a local business. But as an investor, there really wasn't a methodology to approach this. My fear is that because of an institutionalized approach to the market, top 10 mutual funds hold 20% of all investments in the stock market. So you probably all own one of those top 10 in your portfolio somewhere. We're losing a lot of hearts and minds. Look at the statistics, the similarities of what's being offered out there and the kind of repetition that's been going on in the investment and brokerage industries as well as in the business investment. It's all the same, so we're getting a lot of similarity. There's no excitement in that. So the approach I created, 100-mile investing, was really combat this kind of malaise that I was seeing with investors. They weren't feeling that it was in their backyard. So I really drew a hard line in the sand and said, what if we only invested within 100 miles where we lived? I did take some cues from the food movement. There's the 100-mile diet that's out there that basically substantiates that If you can source your food from providers within a 100-mile radius, you're going to get fresher meat, more sustainable businesses, help local farmers, help fishermen and those, the growers and things like that. Works really well from the fertile soil of South Carolina. But what about for investors? Why can't the idea be expanded upon and applied to investment portfolios as well? Wouldn't we benefit here as an economy from a 10% shift if we only focused our attention within 100 miles? For those of you who are down from upstate, you're going to need your own 100-mile radius. Okay, let me make this clear. I'm a capitalist. And I'm trying to make myself and my clients wealthy. But why not do it here first? On the investment side of the equation, 100-mile investing encourages clients and brokers to become more engaged, to shift those dollars locally to locally based, publicly traded companies and state-specific bond portfolios. And it de-emphasizes mutual funds because of your lack of choice and voice and control over those funds. 100-mile investing is a framework for evaluating companies based on their net local impact, where the corporate office is, how many people they employ, do they give back, those sorts of things, in addition to the traditional metrics like price-earnings ratios and free cash flow and whatnot. For local business investments, on the other side, early-stage companies as well as established brands, you gain an ease of due diligence from investing within 100 miles. A real direct knowledge of how they operate day to day, and you can directly impact them by bringing a friend to their business, maybe going to their restaurant. You can create a more suitable loan, royalty, or equity structure by working closely with those businesses, rather than applying an off-the-shelf, traditional principal and interest loan. There's also the benefit of knowing your investment in a local business, employed people in your community, a direct impact on the economy. Trickle-down economic theory work for all you Reaganites. Granted, 100-mile investing would work better in a major metropolitan city, where there are more corporate options, but whether it's Charleston or Chicago, it's still the same barriers to understanding what those companies are all about and helping the economics of that community where you live. I know you don't get your precious high-yield emerging market investments there, but I'm also not a Luddite. I understand that those things need to be included in the overall approach. You can keep your 5% allocation to emerging markets. I'm really only looking to convert about 10% of you in the room anyway. So I feel the results speak for themselves. For the projects that we've put to work, since I've been putting this philosophy to work since probably 2006, I've seen from the investment side a very competitive, not somewhat contrarian approach compared to my peers, while having a higher direct impact on the local economy. For business loans, in the last 8 months, we've put over $2 million to work in this approach. We've had about a 14% ROI, we've had a 0% default rate. Admittedly, sometimes the payments do come in cash. And I've even had to take my fee in bike parts to make a deal happen. But it's part of the fun. These loans are collateralized, they're quite complex at times, and interests remain aligned between investor and business owner. We're all in it together. So what's next for Jericho 2012? By the end of Q1, we're going to have launched our local investment fund. We're seeking a board of advisors, as well as investors who wish to make an impact in the Low Country. Again, specifically to businesses, typically with less than $3 million EBITDA, businesses that have been overlooked by traditional banking. By Q2, we plan on launching a national database for education on 100-mile investing. A real true database, so you can even punch in your zip code, and this is for those folks upstate. Punch in your zip code up there, get a sense of what's out there, get a sense of what businesses are out there to invest in. A real consolidated way to do that. We need a partner in that, a technology partner, and we're potentially going to roll that out as a nonprofit. So in closing, I want to thank you for your time and your support of local initiatives like InnoVenture. And if you'd like to reach out to me, I'm available by phone, web, or even on Facebook. Or feel free to stop by our office to find out more about who we are, how we work, and what we do for our clients and our community. Thanks.